Good morning, traders. It is Wednesday, the 4th of February, 2015, 8 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. The overnight news stream is fairly interesting but fairly light. China's HSBC services hit a 6-month low at 51.8 versus the prior 53.4. Continued slow down. It hasn't dropped below 50, so it's not technically a recession in the service sector. Greek markets see profit taking amid meeting between Greece's finance minister and ECB's head Draghi. The Greek finance minister is assuring the ECB that it's not business as usual in Greece and that they will work out a way to continue to be in compliance with EU requirements, and that it might look to refinance the debt from the IMF through other channels. Also, it reported that it will not be borrowing money from Russia. China's People's Bank of China cut reserve requirement ratio by 50 basis points to 19.5, effective February 5th. The move higher is anticipated in that number. If you look around 4:15 Central, 5:15 Eastern, you'll see a spike in the S&Ps, and that's basically what it is. And then at 7:30 this morning Central, a half hour ago, January ADP employment change came in at 213,000 versus 223,000 estimated. This is the lowest it's been since September. I want to remind you of why this number is even released. ADP is the largest payroll processor in the U.S. This is a company that manages people's paychecks, and they released their number on the Wednesday before non-farm payroll as a barometer of what to expect, and they had a pretty decent miss, again, lowest since September. Looking ahead at 8:45 Central, 15 minutes after the open, we have January final market services PMI, expecting 54.1. The composite PMI has no estimate. At 9 o'clock Central, we have ISM non-manufacturing composite expected at 56.4. Prior is 56.2. And then at 9 o'clock also we have Fed's Powell speaking in Dallas. At 9:30 we have the weekly Department of Energy crude oil inventories. And then at 11:45 Central, 12:45 Eastern, Fed's Mester speaks on the economy and banking. So that leaves us with tomorrow, the Bank of England rate decision, initial claims, trade balance, and Fed's Rosengren. And then, of course, Friday, the big one, non-farm payroll and unemployment at 7:30 Central, 8:30 Eastern, and Baker Hughes, rig count, consumer credit, and Fed's Lockhart to finish up the week. Let's take a look at what we did yesterday. Yesterday was another interesting day. So yesterday opened above the prior day's range, above Tuesday's range. The primary hypothesis was for a break higher early to find sellers and to push lower into 2018.50 and then 1675, and then potentially all the way down to 2003. And that didn't happen at all. Yesterday was an open auction out of range, and it just could not really sustain any selling. So with the overnight high at 34.50, the expectation was that it went right to 34.50 right on the open to fulfill the overnight stat. Then it rotated down. This is the move that I was waiting for as a hypo one for the short back into 1850.19 initially, and then into the prior day's profile, and was looking for 2003. Hypo one was completely, we worked for a couple of scales, did not accomplish its mission. Hypo 1 failed once the market turned back up and over the mid. I was done with that trade. So it didn't. It had a lot more strength than expected. Hypo 2 was the opposite, was a responsive selling for a bounce off of 1850.19 and for a target of 2045.50. Hypo 2 worked out better, but took forever for it to find its groove and to finally push up. It stopped 6 ticks short of its target, again 2045.50, and the market closed near highs with an awful looking high, very, very weak high here. You can see that it looks like a tabletop, and the auction did not taper at the high. So the expectation for the overnight was for continued highs, which it did not do either. So a lot of noise lately, a lot of noise in the way the market's trading. It's still following basic auction principles. But it seems to fold over itself quite a bit. So it's probably very frustrating for anyone who's outside of the day trading realm. So what is this market trying to do? It has made a lower high against the 61 at 59 and a quarter a couple weeks ago, and then it made a lower low at 73.75 versus 81 quarter, took out the 1980 naked point of control and pushed to the CLVN at 73 quarter before it found buyers on Monday. And so what it's doing is it's floating back. My perception of the action here is, yes, you could argue that this is an intermediate downtrend, and therefore the expectation is for it to rotate lower and continue to push lower. Again, the key target below is 56.50, 56 quarter on the downside. But I believe that the sellers are at more risk here. The S&P has already tested, has shifted the point of control here down to 95 on Monday, and has moved value and has breached the LVN into the next high volume node. Currently, we're trading at 34, which is right at that low volume node in between these acceptance areas. And so I'm watching out for that. That's also the OS for yesterday, the OS high for yesterday, 31.75 area. So what I'm looking for today is whether or not the market's able to test down and then push up and hold the upper HVN. If it holds the upper HVN, then we're looking for, again, 45.50, 48 for the peak price here, 48 and a quarter. And I believe that 2060 is now at risk if that happens. So at the close of today, depending on what the participants do here, if the market pushes through to 48 and holds this territory, I believe shorts are in trouble, and 2088.75 is back on deck. Beyond 2060, we have very little to contend with. Look at the volume here, very poor high, and a very thin string of volume, basically a rejection area. And if we come back through this, we might see it zip through fairly quickly. Again, I've been arguing since late last month. I've been arguing for new highs and for 2088.75 to be taken out, because statistically that's what I have. But it's definitely imbalanced, and it's struggling back and forth, and it is making lower highs, lower lows in the interim. The other factor here is if we look at the weekly, the last weekly high was at 2055, so that's another area to watch for a breach, this level here. So first we have 45.50, which is a high volume node. 48 is the again, 48 is the high volume, the MC high volume node, another area of acceptance. And then beyond that, you have the weekly high. You have the weekly high at 55 to be tested. And so In my opinion, if you're short, you're either likely to get stopped out, or you might want to consider looking at some options to hedge your position in the short term. It doesn't mean you have to hold them to expiration, and they'll likely have time decay, but still, in my opinion, going naked short in this market, it's not something that has paid off in the long term. In any case, looking at today where we're opening, the market's right against overnight lows. It is back in value. It is pushing against what was a perfectly balanced day until we broke higher yesterday. Very normal distribution yesterday, and so 2030 quarter is very likely to get tagged here. But I do expect, my primary hypothesis is for the market to drop down and through the overnight low to fulfill the overnight stat, and then to drop through 2030 quarter and push down into the 28 area, the MC HVN, before it takes a bounce and then starts to move back up to close the gap and potentially to threaten that high from yesterday and 2045.50. We had a strong up day with a gap up, and lately every time we've done that, we've had a pullback, and this is the pullback that's occurring overnight. So when we look at the overnight profile, very heavy profile. You can see here the bulk of the volume is right in the middle. Volume overnight is in line with the norm. You can see here we're pushing the overnight low. We keep extending the overnight low into the LVN zone on the MC, as well as yesterday's profile. So tricky open. I'm going to keep my hands off, but the expectation is for it to push down and into this this point of control at 2030 quarter before it finds buyers, and it could push all the way through down into the 28, 27 area before that happens. So that's what I'm looking for. I did an AMA, Ask Me Anything, on Big Mike yesterday. It lasted about an hour and a half, from 4:30 Eastern until about 5:30, 6 o'clock Eastern. And there were a lot of interesting questions that were shared, and I did share some information. I want to make sure that you're aware that that happened, and I'll be posting it on my website, futurestrader71.com. It really is worthwhile. There were some really good questions asked, and I know these are questions that come up and reoccur for many traders. And I really want to encourage you to watch it when it's out. If you're not part of Big Mike Trading, I think you also post it on YouTube. But I finished with key remarks, and I really meant what I said. I think it's those factors that I had mentioned are really important for your trading, really as a career, unless you're doing this because you're retired and bored and have some money to mess around with and lose. If you're pursuing this for a career, it's a worthwhile webinar to watch. I want to leave you with a key message. Again, I hate to sound like I'm on a soapbox and preaching every time, but your focus here really has to be the process. And that's the purpose of these Trader Bites, is to go through my process with you on a daily basis to kind of hammer it in, just the way I did with my prop traders. Repetition makes perfection. We want to submit this process to the subconscious mind, and so that when execution happens, it happens without doubt or fear, or as little doubt and fear as possible. If you're not fearful when you're putting on a trade, you're probably not trading the size that you that is probably most efficient for you. So fear is never going to go away. Our reaction to it is what we can control and what we work on. So I invite you to catch that video. I'm going to post it on my website and tweet it out. Look out for that. Good luck today. I'll leave you with those thoughts, and I'll catch you tomorrow. Take care.